Hello and welcome back to the TradeNeon software YouTube channel. My name is Simon Reichert and I'm part of the TradeNeon Academy team. And with this episode, I'm very excited to welcome you back to finally another episode of the Futures Insights Market Analysis video series. If you're wondering why we didn't upload a market analysis video in such a long time, that is simply due to the fact that with the governmental shutdown, the CFTC, the Commodity Futures Trading Commission, wasn't able to do their work. And with that, we didn't receive any COT data. But finally, we are back to normal and we can finally use again the COT data for our COT-based trading. And to start things off, we are going to have a look at the 6A future, which is the future on the Australian dollar. Before we head into Futures Insights, quickly our disclaimer, as usual, that trading in derivatives or securities in general involves significant financial risk, and also that this video shall not serve as investment advice and/or intermediation. And with this out of the way, I would say let's promptly start off with our dry powder indicators for our leveraged funds. The leveraged funds can be analyzed in the exact same way as the managed money. We just have a differentiation in the COT report between the financials and the commodities, which is why they are not called managed money here, but rather leveraged funds. And we also have a different position from our conventional PMPUs because we have the dealers and intermediaries right here. But I would say let's start off with the leveraged funds as usual, and we can see a position in the open interest that is already quite interesting. Because from these charts right here, we can see that the leveraged funds are quite extremely positioned when it comes to long open interest. So when we look at the relevant paths, which are these bright dots, we can see that our current position from the 13th of January is the most extreme it has ever been. If we now see a position like this, we simply have to ask ourselves if basically all of the trading institutions are already engaged from a long standpoint, then simply who is going to buy even more long contracts. Obviously, we could always, see a new extreme long position in the market. However, that is why we have these dots right here, so we can see what is statistically the most probable case, which is that the long open interest is somewhere in this field. And right now we see an even more extreme position than usual. And basically, that implies two things. First of all, we have a lower chance that new long contracts are opened within the market, and that secondly, these long contracts have to be closed ultimately, which leads to a short push in the market. And fortunately, on the other side, on the short open interest, we have a lot more potential for more short contracts. So right now we have roughly 20 market participants engaged from the leveraged funds point of view, and we can still build that up to 26, 32, or even up to the most we ever had was 41 institutions in 2015, which is already quite far in the past, obviously. But to validate this impression that we gain from our dry powders even further, we can use our OBOS indicator, which basically uses this absolute positioning and relates it to more variables, which is the recent price, depending on this look back period. Right now, we have selected 1 year and also the involved market participants, and also extremely important, the total open interest, and not only the long open interest and the short open interest in them, basically for themselves. And when we do that, we can already see that we get signals from our OBOS indicator. And I mean, you can already see that these signals are quite accurate. So what we can see, we get a signal, eventually the market falls. We get a signal, the market rises immediately. Or here, another signal, the market rises immediately. Another signal, the market rises immediately. Obviously, you can also see that we sometimes get like signals like these, and the market is, well, basically doing not exactly what we anticipate based on these signals, but that is always why we combine this fundamental analysis with a chart analysis, so that we basically can use this fundamental bias that we have for the most probable trading direction, and then we can also use the chart for more precise and exact entry in the market. Let's also have a look at the dealers and intermediaries, and there we can also see quite an interesting position. Because what we can see is that the dealers and intermediaries are selling quite a lot at the moment. When it comes to the dealers and intermediaries, we have to interpret them differently than when it comes to the leveraged funds. Because the dealers and intermediaries are basically those parties and institutions that use this underlying good for their commercial operations. So this simply means that they are dependent in this case on the Australian dollar when it comes to selling the Australian dollars, and also when it comes to buying the Australian dollars. So this is, I like to compare it to when you go to the supermarket and buy your products that you regularly need. When are you going to buy them? Obviously when the price is low. And obviously the sellers, on the other hand, are especially willing to sell when the price, according to the dealers and intermediaries, are at the moment quite high. And this is relevant for us because we can assume that these dealers and intermediaries, due to their involvement with this underlying good, with the Australian dollar, that their market information is more precise than the information the regular retailer like me simply has. So when we look at this chart, we can see that when it comes to a historical comparison, as always, they are selling extremely much and they are buying, well, relatively little. This simply means that according to the dealers and intermediaries, they currently see the price as very high and as very, well, as a very good price for selling at the moment. And same thing as before, to validate this even further, we look at the OBOS chart. That also gives us a signal which is perfect for validating this short bias that we gain from our leveraged funds even further. And let's also have a look at the open interest, if there's any relevant information that we can gain from here. Definitely there, what we saw was a very rapid and intense surge in the amount of open contracts in the market. That was basically aligning with this ongoing long trend over the long term that we see in the Australian dollar, which you can also see right here, that we have an ongoing long trend. However, this liquidation is a first good indicator that maybe the tables are turning, then we can soon expect a short reversal when it comes to this long trend. So this is definitely a good sign. However, we still have enough open interest in the market that we have enough liquidity for good spreads if we want to trade this market when it comes to options, and also for the future that we can get in and out of the market properly. And to solidify this impression that we gain from the open interest, we can also use the flow cube, which basically tells us more about the market dynamics, which is what is currently happening when it comes to price and the open interest in the market. Then we saw that recently, basically, we had a week-long liquidation, which simply means that long positions were closed within the market. However, with, only a little convincement. Then we also saw a weak short covering. Well, that is basically probably was part of this range phase that we currently have right here. but what we can see that we also have already strong short building, which means that new short positions are basically being built. And also recently we had a week-long liquidation, so long positions are further being closed in the market. And this already basically brings us to the end of the video, because the term structure, which would, well, normally give us information about supply shortages in the commodities, is something that we can't use for our financials. With this being said, we definitely have a quite interesting fundamental short bias in the 6A future, in the Australian dollar future at the moment, and if we get a nice chart setup, we can definitely use this market for short trades. I certainly hope that this analysis was helpful for you and that you could retrieve some information for your own trading. As always, if you have any questions, comments, or recommendations, please feel free to drop them in the comments and we will get back to you as soon as possible. With that being said, I thank you very much for watching and see you next time for another episode.